So, hi everybody, this is also Hub and Jacopo, and today we're covering Meta platforms. This is one of the stocks that you asked me. So, here we are. Before we get into the analysis, make sure to like, subscribe, comment which stocks you want me to analyze next, and I'll put them on my list, on my to-do list, and I'll do them as soon as possible. I answer to all your comments, so make sure to use them. So first off, we're going to take a look at what Wall Street thinks about Meta right now, and then we're going into the fundamentals and the track record of Meta. Even though the news that came out were pretty negative, 92% of Wall Street analysts still recommend a buy, 6.6% a hold, and 0.7% a sell. These are all the recommendations for Meta along the years, but let's take a look at the latest ones. So here we see that they are all pretty recent, 4 days ago and so on. So let's take a look at the performance score. Let's see who had the best recommendations in the past. So here we can see that there's a guy from Stifle who did pretty good, and then we see Raymond James and Cohen. So let's take a look at them. Let's take a look at the ones from Raymond James and Cohen. Raymond James, Cohen. Here we can see the ones from Raymond James still has a pretty positive price target. Let's take a look why he had a strong buy earlier this year. So we can see he downgraded from strong buy to outperform, and he said we lower our rating to outperform given slowing advertising revenue outlook. Yeah, that was because of the slowdown of the overall economy, and of course when balance sheets tighten up, the first thing you cut is marketing and advertising. So Meta is reasonable to see Meta have their earnings cut because of the recession or the slowdown in the economy. Next, let's take a look at the one from Cohen. Had an outperform earlier this year, a price target of 330. Okay, they just reviewed their price target. Let's see some more analysts. So here's the one from JP Morgan. Let's see how the price target has changed. They went neutral around July, and here we can see they still have a neutral recommendation but at 115. Let's see the one from UBS. So here's the recommendations and price targets from UBS. He still had a buy earlier in April. Now let's take a look. Still a buy. Yeah, still a buy, but the price target has changed quite dramatically. Let's take a look at their reasoning behind it earlier this year. UBS analyst Lloyd Walmsley raised the price target to 300 while maintaining a buy rating. Reaching our revenue estimates for Meta reflecting the Russia-Ukraine war and comments each quarter, though it is more than offset by lower OPEX estimates, so we net out 6% higher 2023 earnings per share. Okay, let's see what Goldman Sachs has to say. Let's see Eric Sheridan from Goldman Sachs. So they have a buy rate and buy recommendation at 165 right now, and they also follow pretty much the same path, a bit more positive than the other ones, but still pretty much the same path. So next we can see the graph for Meta platforms. We can see market cap, income, market cap still $263 billion, income, and so on. Price earning pretty low. Yeah, probably because market fears are even more negative earnings in the future. So it's probably discounting that right now. Price to sales. Next, we can see what we have already seen, the change in price targets and recommendations and so on. But of course, we still have to consider that Meta is a very solid business, but it's very hardly hit when companies cut their budget, especially their advertising budget, because of the possible recession. Next, let's head to my spreadsheet to give you a better blueprint of what Meta has done in the last 10 years. So, revenue gone up quite dramatically, but we'll see how the last year will impact this track record. EBITDA also grown quite a lot. So a few years back, high multiples were justified, but we'll have to see if they can maintain that growth path on the long term. Certainly, if there's a recession, outlooks will be cut, but we'll still have to see whether Meta is able to reinvent itself like it did with Instagram, WhatsApp, and so on. And we'll see how it performs, for example, in the metaverse and other applications. And now that it has new strong rivals like TikTok and now Be Real. Debt manageable for Meta. EV to EBITDA. Of course, it got lower right now, but probably justified. We can see the shares, they have slightly diluted and then bought a little bit back. And then we see the earnings per share, which have gone up and up very dramatically. So they've had a terrific run, but now there's a bit of a slowdown, and it will be quite hard to maintain that same growth path. We can see that they don't distribute dividends, so this is not a good stock for dividend investors. So this is it for Meta platforms. I hope you enjoyed it. If you haven't done it yet, make sure to like, subscribe, and comment which stocks you want me to analyze next. I answer all your comments, so make sure to do that. This is it for today. I'm Giacomo. This is Hustle Hub. See you next time.